Everything will be tokenized is a statement that is growing in popularity. We're on track towards a world where everything that can be will be tokenized. This trend comes particularly after central banks globally progress past the exploratory phases of central bank digital currencies into building real infrastructure. To catch everyone up quickly, this is from the Reserve Bank of Australia. A CBDC would be a new digital form of money issued by the Reserve Bank. It could be designed for retail or general purpose use, which would be like a digital version of banknotes that is essentially universally accessible, or for wholesale use, where it is accessible only to a more limited range of wholesale market participants for use in wholesale payment and settlement systems. CBDCs may trigger a systematic shift towards shifting all asset ownership, all built on blockchain technology. The next phase for blockchain technology is bridging real-world asset ownership to blockchain, unlocking new opportunities and reducing inefficiencies in the real world. The visionaries who build upon the foundations will transform the space, solving not only problems in crypto, but in the real world too. We can already see this next frontier being developed. One example of real-world assets being bridged into the highly interoperable tokenized world is our very own gold and silver standard, where we tokenize gold and silver in various forms. Something previously impossible with physically backed gold and silver is lending and earning interest. Often gold's biggest criticism is that you can't earn a yield. Well, now you can use DeFi lending to extract a yield. So what else can be tokenized? There's assets, equities, funds, and services. With accelerating digitization, tokenization innovations can have an even greater impact on how we store wealth for future generations to come. Whether that means by transforming traditional drivers like network effects or trade linkages between countries' economies. Future innovations using tokenization, such as DeFi lending/borrowing, practical ownership, crowdfunding and more, have the potential to transform many, if not all, industries. There will be many other developments in this decentralized economy that have yet to be imagined. What we can say is that it will be a much more transparent and direct type of market than what we are used to. Assets that can't be liquidated often have an unestablished market price. In this case, asset owners typically provide buyers with incentives like illiquidity discounts, which reduce the asset's price. Tokenization of assets would increase an asset's liquidity as it facilitates fractional ownership, which eliminates illiquidity discounts. Moreover, selling small fractions of ownership enables owners to charge a fair market price. Another example of tokenizing assets is real estate. Using blockchain technology, tokenization promises to turn the notorious illiquid asset of property into a highly tradable digital share. Exchanging real estate on a blockchain platform will reduce the costs associated with a particular real estate investment. Through tokenization, investors can purchase and sell the digitized asset without incurring closing costs, which reduces transaction costs substantially. Tokenization in real estate has also yielded the positive outcome of fractional and divisible ownership. The value of real estate has traditionally been indivisible as it is treated as a single asset. Tokenization makes it possible to fractionalize the asset, leading to greater access thereto and better liquidity of the investment. Real and digital assets are becoming one. Tokenization democratizes access to markets while ensuring fairness and security. The only obstacle today is legal boundaries. To what extent this hurdle stands in the way depends on the type of assets being tokenized.